Hello and welcome, champions, to our free video guide. My name is William Moon and I'm the founder of Financial Advisor Pro. And in this video, what I'm covering is everything that you need to know how to successfully roll over a 401k into an IRA and to know if it's appropriate for your situation. You see, we know how confusing it can actually be when trying to figure out what to do with your 401k. And if you're like most individuals, you might be worried that you might even make the wrong decisions. But don't worry about it because we have personally helped over 3,000 families successfully roll over their old 401k into IRAs successfully without penalties, without taxes, and things like that. And here you're going to see how simple and easy it is to do that. So let's cover some basics first. When you can roll over a 401k and when you cannot roll over a 401k. So if you've left your job, you're free to roll over your old 401k from your previous job into an IRA at any point. However, if you're still working at your job that provides your current 401k, you typically cannot roll that over into an IRA. Unless you're age 50 or older, some companies will allow you to do what's called an in-service withdrawal, where you could take a portion of your 401k every year and transfer that into an IRA. Just understand that that is subject to approval from your employer to have that process happen. And so that leads us to our next section, which is when you leave a job with a old 401k at that job, you actually have four different options of things you can do with your 401k. Number one is you could take a cash distribution, but watch out, you'll owe taxes on the money taken out with whatever your tax bracket is for that year. Plus, if you're not age 59 and a half, you might also be charged an IRS 10% penalty. And so we don't typically recommend that because individuals taking money out, they're already going to lose at a minimum 15, 20, 25% of any money that they take out. And so the second option that you have with an old 401k is you can actually leave it at your old job. But be careful with this option because some employers may move your old 401k into a low interest earning account like a money market without your consent. Some of you guys might be researching this topic because you've gotten the letter that your account and your money needs to be moved, okay? And so that's really important because I've sat with families who thought they were invested in the stock market for the last 20, 25 years, and they only had $10,000 instead when they were thinking they'd have like $200,000 because it gets put into a low interest earning account like a savings or a money market account. And so we don't typically recommend that either. The third option that you have when you have an old 401k is you could actually take your old 401k and you do have the potential to transfer it into your new company's 401k if they have one, okay? And so, and also if they allow it as well too. And so that can be a convenient option, but it doesn't give you full control over your hard-earned savings and investment potential as well. And then the fourth option, which is why many of you are here, is you could roll over your old 401k into an IRA, which is often the best thing to do because it gives you more flexibility and investment options for growing your wealth for your future. So let's talk about one of the biggest and most important subjects when talking about rollovers: taxes. You see, when taxes are due or not due from a rollover, it's usually because the type of account that the money is going into. And so for that purpose, we've created this really simple illustration to show when taxes are due and when taxes would not be due. And so if you go from a 401k, a regular 401k, and you roll that money into a traditional IRA, you're not going to have to pay any taxes at all. Why? Because the IRS looks at a regular 401k and a traditional IRA the same for tax purposes. They're both really used with pre-tax dollars. And so you're going from a like plan to a like plan. They're very similar, pretty much the same. And so because of that, you will not be taxed on that type of movement from a 401k into a traditional IRA. Now, if you were to roll over money from a regular 401k into a Roth IRA, a Roth IRA is funded with post-tax or after-tax dollars. And so you're mixing post-tax dollars with pre-tax dollars from the 401k. And so because of that, the whole amount that you roll over from your regular 401k into a Roth IRA is going to be taxable. The amount you roll over will be added to your income that year. So depending on how much you're rolling over and also how much money you make, that could put you in a really high tax bracket for that year. And so we actually typically don't recommend that. Now, the last way is going from a Roth 401k. If you were to roll that into a Roth IRA, those are both funded with after tax dollars. And so, in that example, there would also be no tax consequences for that type of rollover. Next, we have full and partial rollovers. You see, you have the option to do a full rollover where you could take your 401k and roll the whole balance of the account into an IRA, or you could actually do a portion of it.
I don't want a piece of you. I want the whole thing.
Typically, if you're going to roll something over, it's better to do a full rollover because, especially if you have multiple 401ks, rather than having multiple logins and stuff, it makes it much simpler to roll over all of your 401ks into one IRA that's going to match it tax wise. So that way it's easier to manage. You have more flexibility with the investment options when you have full control over it in an IRA versus keeping it in a 401k. So when you actually process a rollover, you can actually do it two different ways. There's what's called the direct rollover, and there's what's called an indirect rollover. When you do a direct rollover, that's when the 401k company usually writes a check to the new IRA company with your name attached, FBO, or for the benefit of. So for example, let's say you had a 401k with Fidelity and you're going to roll that over into an IRA with, let's say, for example, Invesco. Well, Fidelity is going to write a check to Invesco for the benefit of John Smith. And so the key is with the direct rollover, it has the investment company's name and your name on it. You're allowed to do unlimited amount of those direct rollovers every single year. You're not capped on how many you can do. And so with an indirect rollover, you're actually only allowed to do one of those every single year. That's when the check is only written in your name, for example, John Smith. You then, when you receive that check, you actually only have 60 days to reinvest that into an IRA. Otherwise, you're going to pay taxes or penalties and things like that with it.
Whoa.
And so typically we only recommend doing direct rollovers because it avoids any taxes, issues, or fees. And with 60-day or a indirect rollover, you can only do one a year versus a direct rollover. You could do all of your 401ks and roll them into one IRA for simplicity. And so the normal processing time from start to finishing a 401k rollover into an IRA is generally going to be around 2 to 3 weeks. It's a little bit of a process just because companies have to process paperwork, mail a check, and so you have mail time and wait time. Then they have to process the check, cash it, and then it's in your account. So the average duration is usually about 2 to 3 weeks from start to finish until a rollover is processed. And once it's done, your former 401k company, they will mail you a tax statement so that way you could report a rollover when you file your taxes. Now, what's the best investment strategy for rollovers in your new IRA? You see, there's tons of different investment opportunities and things like that out there. You got stocks, you got bonds, you got indexes, you have real estate, you got cryptocurrencies, ETFs, and the list, it just goes on and on and on.
Forever.
However, the best way to actually invest your new IRA is actually into a diversified mutual fund. Why? Because it teaches us what we all learned when we were younger. Finish the statement for me. Never put all your eggs in one basket. You heard that, right? And so it's the exact same thing when it comes to investing our money. You see, with a diversified mutual fund, you could be in multiple asset classes like stocks, bonds, right? All those, okay? And the benefit is not only are you in multiple asset classes, because if one of them struggles, an industry struggles, you have the other one to pick up where that one's slacking off. But you also can customize it to your exact personal situation, which is really, really beneficial. You don't have all your eggs in one basket or all in one stock or anything like that. You have a healthy, diversified mutual fund across several different industries. Because one of the challenges that people have is they'll only invest in real estate because they don't have enough money to invest in multiple properties or only stocks or only bonds or only cryptocurrency, where you just want to have a healthy, diversified mutual fund. Why? Because a mutual fund on average has 80 to 200 different companies inside of it. So it's very secure, very diversified. So now that you have all this information, you could actually go out and process a rollover on your own. Or you could do what I would actually recommend, which is click the link below this video and you could schedule a free rollover consultation with a licensed financial advisor that I personally vetted and worked with and trained. And we can show you your options with a rollover. And we'll take out all the complexity and make sure you get an optimized IRA that's specific to your personal investment style with your goals and dreams in mind. And so here's what we do for you is we're going to help you create an IRA that's optimized to your goals and dreams, and we'll even help you choose the correct and appropriate mutual funds. And we work with all major investment companies, so we're actually not obligated to do one type of mutual fund investment. Then, when we have an IRA created, we just do a simple three-way call with you, our agent, and the 401k company, and we process the rollover. And you get to enjoy lifetime access to a licensed financial advisor to work with you. And in many cases, you're going to get their cell phone number, not just a 1-800 number, and they're going to be free to work with for the rest of your time as a client. Yes, that's right. You heard me. It's free. And so our work here, it's more than just work. For us, it's our passion and it's our belief and it's our purpose in life to demystify all the information that's out there and provide valuable information and to repeat that process over and over and over again so that you could be like people like Charlene who invested over 40 years of 401k savings with us in a global pandemic timeframe. And she did not lose money and have to go back to work and stuff like that because she didn't have enough saved. And so when the stock market was going crazy, she knew her investment was safe and secure. Or so that you could be like people like Jen and Carlos, who have done multiple different rollovers with us over the last decade of being a client. And we've helped them time and time again avoid penalties, fees, and other things like that. And so those are only a few of thousands and thousands of families we've helped. So let us do the same thing for you. Go ahead, click the link below, schedule your free, no obligation consultation, and we'll see you on the other side. Click the link now.